What if we told you that a simple item on your dinner plate, pork, is now at the center of a global power struggle between the United States and China? This isn't just about meat. It's about billions of dollars, political strategy, and a changing world order. In the middle of rising tariffs, canceled trade deals, and geopolitical chess moves, one question stands out. Why has China suddenly walked away from buying American pork? In this video, we're breaking down how something as ordinary as a food product has become a powerful economic weapon, and what that means for farmers, global trade, and everyday consumers. From massive losses in the U.S. pork industry to China's new alliances with Spain and Brazil, what's happening behind the scenes is more complex and more important than you might think. Is this the beginning of a long-term shift? Could it reshape global agriculture? And what does it say about the future of U.S. influence in the world market? Let's dive into the untold story of pork, politics, and power. In the middle of a complex and ongoing trade dispute between the United States and China, one unexpected product has become a central player: pork. While it might not seem like a strategic asset at first glance, pork has turned into a powerful symbol of how deeply economic ties and political decisions can affect global trade. Recently, China has taken significant steps to reduce its reliance on agricultural imports from the United States, with pork imports being one of the most notable areas impacted. Amid rising tensions and a series of tit-for-tat tariffs, Beijing has canceled what experts are calling record levels of pork orders from the U.S. This move comes at a time when global trade between the two nations was already strained, and it adds a new layer of uncertainty for American exporters and the broader agricultural industry. Pork is one of the leading agricultural exports from the United States. The American pork industry is a major part of the country's farming economy, particularly in states like Iowa, Minnesota, and North Carolina. For years, China has been a top buyer of American pork, largely due to its massive population and a growing middle class that consumes more meat than ever before. This high demand made China a key market for U.S. producers, who heavily invested in scaling up operations to meet that international need. However, things have changed. China's recent decision to pull back from American pork imports is already having serious consequences. According to estimates from industry analysts, the cancellations could result in losses exceeding $1 billion annually for U.S. pork producers. These aren't just theoretical figures. They represent real-world consequences: lost revenue for farms, disrupted supply chains, and economic pressure on rural communities that depend heavily on agriculture for employment and economic growth. China's decision isn't just about economics, it's also about politics and long-term strategy. In recent years, as the trade war escalated, China began shifting its import strategy. One of its goals is to lessen dependence on any single country, especially when that country is seen as a strategic rival. The U.S. fits that description. This diversification approach has led China to start working more closely with other pork exporting nations, including Spain and Brazil. Spain in particular has made major inroads into the Chinese market. Spanish pork producers have benefited from European Union regulations that promote consistent quality and food safety. These standards appeal to Chinese buyers, especially when the products are competitively priced. Brazil, meanwhile, offers massive agricultural capacity and lower costs, making it another appealing partner for Chinese importers. The shift to these new suppliers is not just a short-term solution. Many experts see it as a long-term pivot. China appears to be reshaping its import relationships to ensure that it isn't left vulnerable if geopolitical tensions worsen or trade policies change rapidly. For American pork producers, this is a worrying trend. Once a country like China finds stable and affordable alternatives, it doesn't easily return to previous suppliers, especially if the pricing and logistics work in their favor. It's worth noting that American pork was one of the few agricultural products that had managed to weather the earlier stages of the U.S.-China trade war relatively well. While soybeans and other crops were hit hard by retaliatory tariffs, pork continued to flow across borders in large volumes. This was partly due to the sheer scale of the U.S. pork industry and the investments made to boost production. But also, there was confidence in the long-standing trade relationship between the two countries. That confidence is now being tested. The impact of these cancellations is not limited to farmers alone. Exporters, packaging companies, logistics providers, and transport operators are also being affected. When one link in the chain breaks, the ripple effect can be significant. Jobs that depend on the success of agricultural exports can be put at risk. Even regional economies in farming-heavy states can start to feel the strain if losses continue to mount. The reasons behind China's decision to cancel U.S. pork imports aren't entirely hidden. Rising costs on American pork, due in large part to tariffs, inflation, and supply chain disruptions, have made it less attractive to Chinese buyers. At the same time, China is taking a broader view. Reducing reliance on U.S. products could give Beijing more leverage in future trade negotiations. In a trade war, every advantage counts, and controlling where essential goods like food come from can be a strategic move. It's also important to understand the timing. The cancellations have come during a period of continued diplomatic strain between the two countries. While there have been efforts to restart talks and ease tensions, no major breakthroughs have emerged. Trade policies have remained largely intact, and in some cases have even been expanded. In this environment, businesses on both sides are looking for ways to protect themselves from unpredictable changes. Despite these challenges, there have been moments where China has resumed large purchases of American pork, usually under specific conditions. These have often coincided with efforts to stabilize relations or when U.S. prices have become especially attractive. But these purchases appear to be exceptions rather than a return to the previous status quo. For the most part, the direction seems clear. China is slowly but surely moving away from being a top customer for U.S. pork. For American producers, this means they're now competing harder than ever in a global market that's getting more crowded. Spain and Brazil are not just filling the gap left by the U.S. and China. They're also becoming more dominant suppliers overall. As they strengthen their relationships with Chinese importers, they could begin to secure long-term contracts that shut American exporters out for years to come. Looking at it from a broader perspective, this situation is just one example of how political disagreements and economic policy choices can ripple out into very practical, everyday industries. Pork might not be the first thing people think of when they hear about a trade war, but it's an area where the consequences are immediate and measurable. Trade isn't just about numbers on a spreadsheet. It's about real goods, real people, and real livelihoods. American agricultural exports have faced a difficult path in recent years. When the trade war first took hold during the Trump administration, the agriculture sector was among the first to feel the pressure. China responded to U.S. tariffs by targeting core American exports like soybeans, corn, and meat, including pork. These countermeasures were not random. They were carefully chosen to hit politically sensitive areas, regions where farming is a major industry and where political support for U.S. leaders, especially Donald Trump, has historically been strong. At first, pork exports seemed relatively resilient. Large-scale investments in production, combined with strong international demand, helped maintain the flow of U.S. pork into China for a while. However, the longer the trade dispute dragged on, the more the pork sector began to show signs of strain. The latest round of cancellations has made it clear that pork, too, is vulnerable to shifting trade dynamics. Recent reports suggest that the volume of canceled pork orders by China has reached the highest level seen in years. American producers, who were counting on continued access to the Chinese market, have been caught off guard. Some farms had already expanded their production capacity based on previous demand projections. With those orders suddenly withdrawn, they're now facing a surplus of product, rising domestic storage costs, and growing uncertainty about where to send their goods. The scale of the affected market is significant. Industry data estimates that nearly $1.1 billion worth of pork exports are now at risk. That figure goes beyond mere lost sales. It represents lost confidence, broken supply contracts, and the challenge of adjusting to rapidly changing conditions. American exporters aren't just losing one buyer. They're potentially losing their most valuable international customer. Why is China making this move now? Part of the explanation lies in the rising prices of U.S. pork. Tariffs have increased the overall cost of American meat in the Chinese market. At the same time, operational costs in the United States have gone up. Everything from feed to fuel to labor is more expensive, pushing prices higher and making American products less competitive. China, always focused on long-term planning, is responding by accelerating efforts to diversify its supply chain. It's no accident that Spain and Brazil have stepped in to fill the gap. Both countries have made deliberate investments in agriculture and food safety, making them strong alternatives for Chinese importers. Spanish producers, for instance, are now known for their high-quality meat cuts and adherence to EU standards. These factors make their pork more appealing to international buyers who want quality, consistency, and a degree of regulatory reliability. Brazil offers something slightly different: scale and cost efficiency. With its vast land resources and massive agricultural infrastructure, Brazil is capable of increasing pork output rapidly and delivering it at lower prices. Chinese importers are taking notice. With access to both affordable meat and high-quality products, China is strategically repositioning itself to ensure no single country has too much leverage over its food supply. This isn't just about pork either. Experts suggest that China's goal is to reduce dependence on U.S. agricultural goods more broadly. That includes soybeans, corn, and even wheat. The ongoing tensions have shown Chinese officials that relying heavily on any one country, especially one that's politically unpredictable, can be a liability. This realization is pushing China toward a more distributed sourcing strategy. The implications for U.S. agriculture are serious. For decades, American farmers relied on the assumption that China would remain a consistent and growing market. This belief led to major investments in infrastructure, land, and supply chains, all geared toward feeding China's vast consumer base. But the trade war has disrupted that assumption. The message from Beijing now seems clear. American products are no longer essential. Politically, this shift is hitting close to home for some U.S. leaders. During his presidency, Donald Trump frequently promoted his trade tactics as hard-nosed but effective. He claimed that China needed the U.S. more than the U.S. needed China, and that aggressive negotiating would lead to better deals. In practice, the opposite seems to be happening in sectors like agriculture. By introducing steep tariffs and expecting China to cave, the U.S. underestimated Beijing's willingness and ability to adapt. The result is more than an economic loss, it's also a political blow. Many of the rural communities now facing pork export losses were core supporters of Trump and his trade-first policies. These are the regions where campaign promises of winning the trade war played especially well. Now, with farm incomes under pressure and market access slipping away, there's a growing sense that those promises may not have been fully realized. Even though Trump is no longer in office, the legacy of his trade policies continues to influence current negotiations and relationships. The Biden administration has not drastically altered course. While the tone is less confrontational, the strategic approach remains firm. U.S. officials still see China as a competitor and have maintained many of the tariffs introduced in previous years. That continuity suggests that the agricultural tensions are not just a passing phase. They may be a lasting feature of U.S.-China relations. In China, officials are making it clear that their decisions are about more than short-term price changes. They're part of a wider geopolitical strategy aimed at protecting national interests. From the Chinese perspective, being too reliant on American imports could become a weakness in future disputes. Diversifying their food supply isn't just about economics. It's about national security and political leverage. There's also an emerging trend among global trade observers who view China's behavior as calculated rather than reactive. According to this view, the cancellation of pork orders is not just a response to price changes or trade barriers. It's part of a broader effort to signal power and control. By showing that they can shift demand elsewhere, Chinese leaders are asserting that they will not be held hostage by any one country's trade policy. For the United States, this raises some tough questions. Can American producers adapt quickly enough to find new buyers? Can they remain competitive in a world where other nations are catching up in quality, volume, and logistics? And how should the government support the agricultural sector in the face of lost markets and rising production costs? These are not easy questions to answer. The agriculture sector is deeply interconnected, with changes in one area often triggering effects in others. For example, a drop in pork exports can lead to lower prices at home, which might seem good for consumers in the short term. But if those prices fall too low, producers may scale back operations, reduce investments, or even exit the industry altogether. That could eventually lead to supply shortages and higher prices in the long run. For American pork producers, the immediate concern is what to do with the surplus. With a major buyer like China stepping back, much of the pork intended for export is staying in the domestic market. This sudden increase in supply has the potential to push prices down in the short term. On the surface, that might sound like good news for consumers, who could see cheaper pork products in supermarkets. But for producers, it introduces serious financial stress. They're dealing with fixed costs: land, feed, labor, equipment, and when prices drop below break-even points, even large-scale operations can find themselves in trouble. There's also the risk that a temporary drop in prices could mislead markets. If consumers expect low prices to last, while producers are actually losing money and scaling back operations, a future supply crunch could follow. In the long term, reduced production could mean higher prices, job losses, and fewer rural economic opportunities. This is especially relevant in regions where agriculture is the backbone of local economies. Beyond pork, other agricultural products are now under the spotlight. Industry analysts have started warning that what's happening in pork could be a preview of similar moves involving soybeans, corn, wheat, and even beef and poultry. China has already demonstrated a willingness to expand its agricultural partnerships. If it applies the same diversification strategy to these other imports, the ripple effects could be much wider than what we're seeing today. Soybeans, for example, are another major U.S. export to China. They're used heavily in animal feed and food production. Any cutbacks in this area would hit large-scale American growers just as hard, if not harder, than the pork sector. Corn and wheat, both essential global staples, could follow the same pattern. If China decides to start buying more from countries like Argentina, Ukraine, or even Canada, the U.S. would face tough competition in markets it once dominated. From a political point of view, this development is hard to ignore. Former President Donald Trump made agriculture a key part of his trade agenda, promising that tough tactics would result in better deals and reduced trade deficits. In many speeches, he referenced the strength of American farmers and their role as a symbol of U.S. independence and power. But the current reality paints a more complicated picture. While tariffs were intended to pressure China into concessions, they seem instead to have pushed China to look elsewhere, permanently in some cases. That's not to say China is acting purely out of revenge or retaliation. There are economic factors at play as well. Rising costs in the U.S. make American products less attractive. Currency shifts, labor shortages, and pandemic-related supply chain issues have all made it harder for U.S. agriculture to remain competitive globally. China is simply responding to market conditions by finding suppliers that can meet its needs more efficiently. Even so, the timing of these decisions and the scale of cancellations suggest there's more than economics at work. There's a strategic calculation behind China's actions. Diversifying its suppliers not only lowers its costs but also reduces its exposure to political pressure. If the U.S. government tries to use food exports as a bargaining chip in future negotiations, China wants to be in a position where it doesn't have to rely on them. This puts American producers in a difficult spot. They must now rethink their approach to international trade. Should they continue banking on large volume exports to countries like China? Or is it time to look at emerging markets in Southeast Asia, Africa, or Latin America, where demand is growing but competition is also increasing? These questions aren't easy to answer, especially when the farming industry is tied to long production cycles, regulatory hurdles, and major financial risks. Farmers are also weighing whether to adjust what they grow or raise. If pork exports continue to decline, some may decide to shift away from pig farming entirely. Others might downsize operations or move toward different crops. But those decisions aren't made overnight. They require investment, time, and a reasonable level of confidence in future demand, something that's in short supply right now. Meanwhile, countries like Spain and Brazil, who have taken advantage of this opportunity, are rapidly strengthening their presence in the Chinese market. For them, this shift has opened doors that were previously harder to access. Chinese importers, once focused heavily on American suppliers, are now building long-term relationships with new partners. Over time, this could lead to preferential agreements, streamlined logistics, and better trade terms, none of which benefit U.S. exporters. Whether these new suppliers can hold on to their place in the Chinese market over the long term remains to be seen. China has, in the past, made sudden changes to its import strategies based on price, availability, or diplomatic goals. There's always a level of uncertainty. However, one thing appears to be certain. China is committed to reducing its dependency on any single country. It wants options, and it's building them. This diversification strategy extends beyond pork and food. It reflects a broader shift in how China approaches international trade. Rather than locking itself into bilateral deals, it's choosing to work with a wider range of partners, giving itself more room to maneuver. That's a smart move from a strategic perspective, but it leaves countries like the US facing a more fragmented and competitive global market. In this context, American agriculture may need to innovate to stay relevant. That could mean improving supply chain efficiency, investing in automation, focusing on sustainability, or increasing product quality to justify higher prices. Government support might also be needed, whether through trade negotiations, subsidies, or efforts to open up new markets. Without these changes, the U.S. risks falling behind not just in pork but in agricultural trade more broadly. For now, the pork cancellations are being viewed as one of the clearest signals yet that China no longer sees the U.S. as its default supplier. That's a hard pill to swallow for many in the industry, especially those who relied on the promise of strong, enduring trade with China. But it's also a wake-up call. The global market is shifting, and adaptability will be key to survival. The broader economic consequences could also become political issues. If farmers lose income and rural economies begin to suffer, this could influence future elections and public opinion about how trade policy is being handled. It may also put pressure on U.S. officials to find more balanced, stable trade strategies that protect American producers without sparking damaging retaliation. At the end of the day, what began as a set of trade policies aimed at strengthening America's global position may have led to reduced market access and increased uncertainty for one of its most vital industries. Whether this is a temporary challenge or the beginning of a longer-term decline depends on how both governments and producers respond. China's message is clear. The U.S. is no longer its only option. That message has implications far beyond pork. It speaks to a changing world where economic influence is more widely distributed and where power lies in flexibility, not just production volume. As the global trade environment continues to shift, all eyes will be on how the U.S. agriculture sector adapts. For now, the pork industry is on the front lines of that adjustment, and the outcome could set the tone for the future of American exports in a rapidly evolving world.